Well, it has been a turnaround for most of those commodities because of the decline in US dollar and because the Ukraine and Russia sanctions also have led to some safe haven buying in commodities into those tangible assets there. Take a look at the gold price. It's holding around 1305.6, so you have seen good gains coming in for that one. The Indian price is also trading in the positive. The good gains, of course, have come in for silver because that tends to rebound or go lower faster. So you have seen a good amount of gains there. 42,000 is back on your screens in case of silver. The energy space in the meanwhile is trading firm for a third straight day. We are still holding below $100 per barrel for NYMEX, but we have seen coming off from the kind of lows that we saw in the previous week for this commodity. After 2 weeks of losses, this week is starting positive because of the Ukraine issues yet again, and there has been some problems on Libya as well, where the output has seen a decline. The base metal space in the meanwhile has seen some pressure coming in. The Chinese data has not been so positive, so there is no real buying interest coming in for this area. But how do you trade all of those commodities? For that, let's get in Hitesh Chen from IIFL, and he joins us live on the show. Hitesh, hi, welcome. What's your sense on the oil and gas space, especially natural gas, where we've seen some kind of a strength returning yet again?
I think the seasonality, see, I'll be banking on the seasonality factor, and the seasonality factor is over. So I think in the longer run, or maybe in the coming weeks, I don't think so. Natural gas price will sustain around 4.7 or 4.6 levels on the NYMEX. Eventually, on the domestic front, that is the MCX prices will not also sustain around 282 to 290 levels. I think once 282 is taken away, we can go by low as 271 or 270 levels. But in the short run, or for the next 1 or 2 days, I'm expecting the levels of 277 or 278 levels.
Hitesh, also how would you look at the gold prices? Because while we've seen a rebound coming in, it's trading nearly at the best levels that we saw in mid-March. Do you think this gains will hold on?
See, Manisha, for the past 4 weeks, if you see, gold prices are confined in the narrow range of $50 from $12.80 to $13.20 or $13, whatever. See, all the prices made a low of $12.72, they have not breach to the 1280 levels on a closing basis. So, see, we have basically counterbalancing forces. On the one hand, we have the Ukrainian situation, and on the other hand, we have improving economic landscape in the US. See, although the situation remains aggravated in Ukraine, but I don't think so. They will provide an impetus, a larger impetus prices to move toward 1340 or 1380 or $1400. I think eventually the focus will shift back to the US macroeconomic backdrop, where we're seeing hopes of revival or good signs of revival, where the latest the job numbers or the non-farm payrolls are on a positive side. Although the economy has slowed down the first quarter, we've seen US GDP coming at 0.1% because of the weather conditions. I think it is gaining traction, and things are going to do well in the second quarter. So eventually there is no substantial reason for the bulls to sustain at highest levels. I think the prices are eventually going to move lower. And the domestic variables as well, because post-elections, I think everybody is expecting rupee to appreciate towards 57 or 56 levels. Then we also may have a rollback in the import duty. So all these factors are going to effectuate a big drift in the lower drift in prices, and eventually I'm seeing gold prices moving towards 25,000 rupees. For today, I think we can sell around 28,950, and the target would be 28,600.